Well, good day, everyone. It's Liam Garman here, editor of Real Estate Business, back today with another episode of Barbecue Tips with my good mate, Matt Tiller. One thing we haven't spoken about over the last few episodes is commercial real estate, macro. Talk to us. We're seeing huge changes in the global economy. A lot of people are concerned that this might flow on into the Australian economy. I guess it's a question you're getting asked all the time.
Yeah, absolutely. There is a lot of global uncertainty at the moment around, particularly what's happening on the trade front with the US imposing tariffs on pretty much every country at different rates at different times. So it's yet to sort of affect our economy directly, but it is having an impact on our trading partners, and particularly we'll see a slowdown if it really does hit China's economy hard. But at the moment, Trump seems to have paused their, I suppose, trade dispute with China.
Very diplomatic term.
Yeah. So I think at the moment, we're in August. That's where it sits at the moment. But tomorrow that could change, because you never know what's around the corner with what's happening in the US at the moment. But in saying that, from an Australian economic perspective, we have inflation is back down, into that 2 to 3% band. There still is a little bit of stickiness in some of the inflation numbers, particularly in services and housing inflation. So there's nothing really to worry about from an inflation point of view at this stage. That may come if those trade concerns start to flow through the global economy and prices start to rise globally. That may flow through later on in the year towards us. But from an employment point of view, yes, I've said this in previous episodes, that unemployment is slowly rising, but it still has a 4 in front of it. It's low 4s, and it's pretty tight in the employment market at the moment, despite that softening. So I think if we looked in historical context, the economy is doing okay. Household spending did come off a little bit, over the course of the past 12 months. That's stabilized a little bit, and hopefully that will, pick up as we come into that end of year Christmas period.
As we're looking at different parts of the economy and how they interact with each other, you mentioned the term inflation, which is, now I'm probably going to use the incorrect term, is a cost push side of the equation, which is if you do have these economic ramifications of a trade war, the price of goods increases, which will then just flow on throughout the Australian economy. Is that a style of inflation that, not to be alarmist, because as you've already pointed out, a lot of it has been averted. Maybe there was some bravado in the talk that hasn't necessarily flowed through. Would that potentially stop the interest rate cutting cycle if prices did go up, or would we potentially cut interest rates to get the economy back on the track in that event?
No, I mean, the RBA is being pretty explicit that inflation needs to stay within that 2 to 3% band. So if there was an increase in prices, or if the forecast was that the tariffs would affect inflation in the Australian economy, then that would cause the RBA to pause. And then potentially, if it does lift inflation here, then obviously there is a real low risk that the RBA will increase interest rates, but we don't see that happening anytime soon.
I mean, it's one of those things that we're looking at the margins here, and there are more important things that I'm getting asked all the time, and I'm sure you are as well, around the barbecue, and particularly in terms of commercial real estate. And the reason that we started talking about the macroeconomic side is commercial is really at the forefront of exposure to those global movements. Where do you see Australia's commercial real estate market at the moment, and where do you think it's going over the next 6 to 12 months?
Yeah, I think it's pretty healthy at the moment, right across the different asset classes of commercial. I mean, office is probably the one that still is a little bit soft. There's all this talk at the moment still around work from home and what's the norm of that. We've seen in Victoria they're trying to legislate the right to work from home. How does that affect the office market down there? Vacancy rates across all the major CBD office markets, are still elevated and slightly high, but occupancy has been coming back in. And I suppose what tenants are looking for has changed, and landlords have adapted to that. So tenants may be relocating into a smaller space, but they're generally relocating to a higher quality space. So that kind of flight to quality is still happening in the market. In terms of the fundamentals for office, yields have started to stabilise and firm. Rents have also started to stabilise, particularly in that kind of prime market. Secondary is still a little bit soft. So we're still working through that in office and what that means. And actually suburban office is doing quite well as well. Vacancies are still a little bit high, but we're seeing some of those smaller businesses take up some of the space in some of those smaller markets. If we look at retail is actually performing quite well, despite that sort of slowdown in household spending. We've seen some of those major shopping centres come on the market for sale and sell quite well, quite healthy yield, and I think the CBD, strip retail is starting to come back a little bit as well. Again, that's finding its feet after the whole work from home change that's happened. So. Smaller suburban retail as well is doing quite well. We're seeing some of those kind of suburban retail shops sell at quite healthy yields as well, and the take up from smaller businesses has been quite healthy. Industrial, well, that's probably been the standout performer over I don't know how long, probably now the last 5 years at least, probably since COVID. Really transformed the way we purchase our products. Online spending has really gained a lot of traction since then, and you need sheds to store the products coming in from overseas. Sure. You need the transport and logistics operators have grown a lot over that period, and they need more space to handle all the online spending that's happening across the economy at the moment. So that's been the real standout performer. But in saying that, a sort of a softening in the economy, a slight softening in the economy has sort of seen inquiries sort of just tick back a little bit for some of those kind of industrial spaces that we're seeing at the moment. But all in all, pretty healthy.
Yeah, I know a lot of investors that are getting really fantastic yields in the industrial space, especially off the back of, as you've highlighted, that global economy in the warehouse logistics space, because just the demand is spiking. But also on a square footage basis, people that have had industrial sites, even on the outer rims of metro areas or large regional centres, demand is at a premium for that space. So some fantastic yields there. I find the work from home space or argument in Victoria is going to be quite pivotal, especially given I think it's 2 days a week mandated work from home. And you've got that on one hand, but on the other hand, you've seen an increase in supply of office spaces grow. And you've highlighted as well, which is you're seeing buyer or tenant behavior change, because a lot of these new spaces that are coming on board are premium. People realize that, well, if I want workers in the office, if I want them to do their best, I want to give them a really good office space. So you're seeing this huge upswing into the premium space, and that B, C, D level office space demand is really dropping off. What tips, what advice could you give to commercial agents working in that space, in particularly the office space? Because I can imagine it's quite a pivotal part, quite a lot of changes that they're seeing at the moment there in terms of tenant behaviour.
Yeah, absolutely. I think that it is a challenge at the moment for those, I suppose, secondary grade office space. There is still a fair bit of vacancy in that market. I suppose that, I mean, the tips at the moment, I don't know if I have any tips for the commercial agents at the moment for work from home, because I think different markets are performing differently. So, in Sydney, I know the government is really pushing to get, the public service back into office. So
Kicking and screaming, though.
that's right, yeah. kicking and screaming. So I think really, it's about encouraging your landlords out there to ensure that the space that they have is positioned correctly for the target tenant that they're looking for, because we're seeing. And additionally, if there is a secondary asset that does have a lot of vacancy, we're seeing some of those assets be repositioned as well. We're seeing in Sydney CBD, we've seen a few go to hotels. We know there's a big shortage of residential space in most of the CBD markets. Some of that can get repositioned. So having a look at what the highest and best use is of that asset is really important. And as an agent, that's the advice you can be providing back to your landlord.
I know we're based in North Sydney, and I know a lot of the former office spaces are they're transitioning to residential, given the huge demand for residential spaces. But also, I think at the crux of that advice is just stay agile. See what other alternatives are out there. If you're grade B, or is that like derogatory for less good office spaces? Do we say grade B?
Just say secondary.
Secondary. Okay, we'll say secondary. For secondary office spaces, if you're competing in a cluttered market, you just have to stay agile. It's as simple as that.
That's right, and it's all about return for the landlord. So, what is the highest and best use for that asset, and what's going to generate the best return and best outcome for the landlord?
Now, conscious of your time, I reckon we got to get into these snags.
Absolutely. Let's dig in.